Here's a summary of the Procter & Gamble Company's 2025 Q3 earnings call, designed for reading aloud. P&G reports Q3 2025 results, adjusts fiscal year guidance amidst consumer and retail volatility. Good morning, everyone. Today, we'll be reviewing the Procter & Gamble Company's third quarter results for fiscal year 2025. We'll cover our financial performance, strategic initiatives, and provide updated guidance for the full fiscal year. Financial highlights for Q3 2025. The company's top and bottom lines were notably impacted by consumer and retail volatility, particularly in the US and Europe. P&G's strategy during this period has been to protect its long-term brand health, innovation, and demand creation investments. Organic sales grew 1% for the quarter. This growth was driven by a 1% increase from pricing, with volume and mix remaining flat compared to the prior year. Growth was broad-based across categories, with 7 of 10 product categories holding or growing organic sales. Strong performers: personal healthcare up high single digits, skin and personal care grew mid-singles. Fabric care, oral care, feminine care, grooming, and hair care were each in line to up low single digits. Underperformers: family care, baby care, and home care were each down low singles. Geographic performance: North America, organic sales grew 1%. This slowdown from the prior 5-quarter trend of 4% growth was attributed to lower consumer offtake and trade inventory reductions. A positive sign is that shipments returned to pace with consumer offtake in March. Europe-focused markets: organic sales were up 1%, with similar impacts from consumer confidence. France remains a significant headwind, with organic sales down high teens. However, the annualized impact of the Eagle-free law should lead to easier comparisons going forward. China: organic sales declined 2%, a modest step up towards returning to growth. Notably, SK2 in Greater China saw double-digit growth due to strong consumer response to its super premium LXP innovation. Latin America led enterprise markets with 6% organic sales growth, despite challenging consumer dynamics in Mexico. Profitability: earnings per share, EPS $1.54, up 1% on a currency-neutral basis. Core EPS increased 3%. Core gross margin down 30 basis points. Core operating margin increased 90 basis points, or 100 basis points currency-neutral. This improvement was supported by strong productivity gains. Cash flow and shareholder returns: adjusted free cash flow productivity 75%. Cash return to shareholders: nearly $3.8 billion in the quarter, comprising $2.4 billion in dividends and $1.4 billion in share repurchases. This includes the announced 5% increase in the quarterly dividend, marking the 69th consecutive annual increase. Strategic focus and innovation: P&G emphasized its commitment to its integrated growth strategy, focusing on delivering superiority across its portfolio to drive category growth, consumer value, and shareholder returns. Key elements include portfolio management: actively managing its portfolio to strengthen U.S. dollar-based returns in daily use categories. Productivity: accelerating productivity to fuel investments, mitigate headwinds, and expand margins. Constructive disruption: continuously innovating and adapting to extend its competitive advantage. Innovation pipeline: the company highlighted significant new product launches and planned innovations across key brands like Crest, Oral-B, Tide, Gain, Venus, Tampax, Pampers, Febreze, Dawn, Cascade, Mr. Clean, and Swiffer. They are committed to maintaining innovation plans even amidst consumer softness. Updated fiscal year 2025 guidance: given the ongoing volatility, P&G has adjusted its outlook. Organic sales growth now expected to be approximately 2% for the fiscal year. This translates to a fourth quarter organic growth range of 0.5% to 4.5%. Core EPS, now projected to be between $6.72 and $6.82 per share, representing 2% to 4% core EPS growth versus fiscal year 2025 prior year core EPS of $6.59. The fourth quarter guidance is a range of $1.37 to $1.47. Commodity costs outlook remains unchanged, forecasting a headwind of approximately $200 million after tax. Foreign exchange, now estimated to be a headwind of approximately $200 million after tax, as rates have eased modestly. Below-the-line items, anticipated to be around a 4-cent headwind to core EPS, considering lower non-operating income and an effective tax rate roughly in line with the prior year. The fourth quarter base period includes a gain from a divestiture. Adjusted free cash flow productivity, forecasted at 90% for the year. Shareholder returns, plans to return $16 to $17 billion to shareholders, including approximately $10 billion in dividends and $6 to $7 billion in common stock repurchases. Tariff impacts. Guidance assumes a range of $100 to $160 million in tariff impacts in the fourth quarter, or 3 cents to 5 cents per share. This impact is primarily from raw and packaging materials sourced from China and responsive tariffs on U.S. exports to Canada. Management's outlook and risk factors. CEO's statement, implied through CFO's remarks. P&G remains confident in its strategy, especially during difficult economic times. They are focused on investing in brand strength, innovation, and demand creation to drive market growth and deliver balanced growth and value creation. The long-term focus on brand health positions them for stronger growth as economic conditions improve. CFO statement, Andre Schulten. The company is adjusting guidance to reflect near-term volatility, prioritizing long-term brand health. He highlighted the consumer's response to economic uncertainty, leading to softer consumption. P&G is doubling down on its strategy of innovation and superiority, supported by strong productivity. The company views itself as well-positioned to serve consumers across all value tiers and channels, even with potential trade-down. Tariff impacts are significant, but are being actively managed through productivity, sourcing, formulation, and pricing. Key risk factors: consumer and retail volatility, ongoing softness in consumer spending and retail dynamics, particularly in the U.S. and Europe. Input costs and currencies, volatility in commodity prices and foreign exchange rates. Geopolitical dynamics and tariffs, uncertainties around geopolitical events and the impact of tariffs on costs and pricing. Supply chain disruptions, potential major disruptions to global supply chains. Store closures, continued risk of store closures impacting retail operations. Private label competition. While private label share has been trending down, its competitive impact needs continued monitoring. Future outlook and strategy. P&G is focused on a 2 to 3 year glide path to deliver mid-low to mid-single-digit top-line growth and mid to high single-digit EPS growth. They remain committed to investing in innovation and superiority, seeing these as critical to capturing growth opportunities and reinforcing their market leadership. The company anticipates category growth rates to return to historical levels of 3% to 4% over the midterm. In summary, P&G is navigating a challenging environment with a steadfast commitment to its long-term strategy, prioritizing innovation and brand strength to drive growth and deliver value to consumers and shareholders. Thank you.